Hi there, Sarah Copeland, and here today I want to talk to you about bankruptcy and what is happening to a number of very solid big investors and other business people in the real estate world right now who are having severe financial hardship and even going bankrupt. And what is going on? And I asked this question of somebody else the other day, and we had a really good conversation about it. And what it really comes down to is the market that we're in, what's happening in our economy, what's happening with banks and rates, what's happening with long sale times and investor hesitance to buy. And there are a whole bunch of factors. But what it really comes down to is not having multiple exit plans, banking considerably and heavily on one particular strategy, and an inability, I think, to be able to pivot and change direction quickly enough to be able to avoid these severe financial challenges. A lot of investors can be overconfident and overstep and not build in contingencies into their deals for when things go poorly. I myself am feeling this tightening. I'm feeling the challenge and I am feeling the struggle. And the struggle is real. I have a construction project that's gone over a year, over time. It's gone way over budget. And had I not had other assets and other methods of income and other resources to be able to support that project, I would be one of those unfortunate people going bankrupt. And so I think that this is what's sort of happening in the market is people have taken on these deals that have these extended time frames. In particular, it's developers, people like myself who do infill sort of development or like rehabs on buildings where you would project it out what's going to happen, and it's taking longer, it's more expensive. And then not only that, when you go to refinance at the end of the day, and you had planned on a certain loan to value, you'd intended on a certain rate, you'd intended on a certain amount of money coming out of that deal, and that is not at all the same as it is when you actually analyzed these deals 2 and 3 years ago. And so what's happening is even when a project's completed, it can't pull out the money that's required in order to pay off the debts that have occurred on it. And so people are in a position where refinancing doesn't get them what they need, and they don't have the funds to pay everything out, and so they go bankrupt. And then that actually has this spiraling effect, because when an investor goes bankrupt and can't pay, the people who are supplying them can't pay the mortgage broker, can't pay the contractors, can't pay on all of these different levels. It impacts those businesses as well, and then those businesses struggle. And so thankfully for myself, I am feeling the pinch and I'm feeling the tightness, but I'm also feeling gratitude in how I've structured my businesses and how I've structured my deal, and I have the ability to be able to pull from other places and to be able to make things work so that I can continue to move forward and be stable in this environment. So as you're going forward and you're looking at deals and you're planning, I do suggest to always have contingencies, always have alternate exit strategies, and make sure that you're highly conservative in the first place to be able to make sure that you're going to be able to exit your deal however successfully without becoming too financially constrained. If you want to talk more about that, if you want to work with an investor who is able to pivot and plan and have contingencies, I do work with investors, so reach out. My website is www.sarahcopeland.ca.